Hey, strategic wealth preservation investors, it's Chris Vermeulen from thetechnicaltraders.com. And I want to bring to you the quarterly report on precious metals and kind of the overall market bias and where I think the markets and metals are headed in terms of a technical point of view. So let's kind of jump into the overall stages of the market so you get an idea of where I'm coming from and understand kind of the background of the markets. Now, in short, there are 4 stages to the stock market. Stage 1 is a basing stage. It's kind of shaded red here because it's a waste of time. You park money in anything that's just going nowhere. In terms of stage 2, this is a raging bull market, a super cycle to the upside. Big gains are made. And then there's a stage 3 where things are overall kind of topping out, losing momentum, and become very kind of stagnant and choppy. And then we go into a stage 4 decline. Now, this works with any commodity, any price time frame. Could be a 1-minute chart, could be the monthly chart. And it happens with stocks, it happens with commodities. And where the economy in the stock market is, and assets in general are in a stage 3 topping phase. Now, this is a good thing for precious metal investors, because when we go into a stage 4 decline and we have a financial reset where real estate corrects, the stock market corrects in a big way, it typically pulls precious metals down with it. And that is an opportunity to purchase gold, silver, and even miners for that matter at a very good price once this stage 4 decline is completed and a new bull market is on the verge of starting. So that is like the real kind of key thing. And I'll just quickly scroll down to some cycles here just so you can get an idea of how this market moves. So there's 2 different cycles in the financial system. There is the stock market cycle, which is this blue kind of green cycle here. And then the yellow is the economic cycle. And we tend to find the stock market leads the economy. So when the economy starts to get weaker, the stock market knows that way ahead of time. It already sees forecasted earnings being reduced on companies, so they start selling companies. So the stock market will top out and start to head lower before we have 2 bad quarters on the economy saying, okay, now the economy is getting weak. And what's interesting here is we usually see energy and precious metals do the best just before the stock market tops. And of course, energy topped out in 2022. It had a very big year. It was the leader. It is now fizzled out, and now precious metals are holding up the best. We look at gold trading near all-time highs. It's not really taking off at this point, but it is holding up much better than everything else, testing the all-time high kind of levels. So that is a good sign in terms of telling us that the stock market is kind of on its last limbs here, and we're probably going to see a bigger correction and probably see gold and silver correct in price, giving us an opportunity to get into those. So let's go and take a look at that real quick here. If we take a look at let's just take a look at the stock market, or sorry, the gold chart. Now this is the monthly chart of gold, and it has been putting in these topping candles, 3 of them. You could argue this is a triple top, not a very bullish sign in the near term. We are set, I think, for a financial reset, which we could see gold potentially come back down towards the $1,700, $1,600 per ounce over the next several months. In the grand scheme of things, that is a very normal pullback with this chart pattern, with the size of this pattern that is playing out. And when we had a financial correction back in 2008, when we had the last major kind of stage 4 decline, gold was up testing the highs. It kind of put in a bit of a double top here, and gold corrected 34% before it took off for that next major leg. So if we have this correction, I think we could see gold. I would personally love to see gold back down at $1,600, $1,700 an ounce. It's likely going to be the last opportunity to get in before it starts the next major rally to the upside, which using momentum, using a tool called Fibonacci extensions, we can get an idea of where those upside targets are for gold. You can see 2,700 is the next 100% measured move based on this pattern. So you've got a rally up, you've got a correction, and then you have the second half of that move. So there's a lot of opportunity Keep in mind, this is a monthly chart. We could have another 5 or 6 or 10 bars where the market is still in this range. That means we're going into 2024 already before we really start, to break out and hit some levels. So these are major, major patterns. And where we are right now in terms of these patterns is it feels though we are in the start of a super cycle. So the last super cycle for commodities was right over here in 2000, 2001, where the stock market was kind of topping out. The dollar was topping out, and commodities were one of the most undervalued things. Well, believe it or not, that actually kind of took place over here, and it's still the similar type of scenario where we are right now. And so what's really exciting is this, this giant pattern here goes up and shows us a huge upside price target going forward. Which, believe it or not, if we were to measure that out with a Fibonacci extension, you can see where that goes. It goes back down to this low here. We carry that forward. You can see that level actually is the same. Let me just pull this down a bit. As this shorter term one I just showed you, both targets come out at 2,700. And so the fact that we've got a shorter term pattern here pointing to that price, and we've got the last super cycle rally and pullback pointing to that price, this is a very, very good sign. In fact, when price rallies up and pulls back and then pushes up towards the 618, this orange level, anytime price hits that 618 and pauses for a while, it almost always hits the 100% measured move. So we have two major different time frames. We've got a short-term multi-year cycle, and we have a 20-year super cycle pattern, both pointing to 2,700. So anywhere that gold or silver is purchased, more so gold in this case, purchased, anywhere below where it is, it's still a great opportunity because there's going to be some great gains to the upside. So that is really, a lot of people don't realize that there's a lot of momentum in this, in the gold movement. But again, these are major patterns. They take years to unfold, but very strong and accurate, this type of analysis. So let's go take a look over at silver real quick. If we take a look at the silver chart, silver is definitely struggling compared to gold. If we were to compare silver to gold, gold is probably trading equivalent to this area here. Gold is close to breaking to new highs. Of course, gold is put in the kind of the triple top pattern we've looked at. And so gold is just kind of testing at these highs and holding up, where silver is actually still down quite a bit. From the highs, silver is down roughly 54%. So we're definitely not seeing that type of explosion, that excitement yet in silver. I think silver time will come when it shines and outperforms percentage-wise. It almost always does, but it also can get hit the hardest. So if we go into a correction with the stock market in 2008, when we had a very similar setup that we're in right now, silver pulled back 60%. So if we were to, I'm not saying silver is going to pull back that far, but silver could potentially, have a very deep pullback over the next several months, come back down to this lower support level, which is probably 60%, somewhere in this range here. And then, of course, once it gets traction, it will turn around, and I do think silver will skyrocket. Silver has a way of playing catch up and really taking off, but it is still a speculative metal. It also, people who hold it, a lot of people who hold silver will sometimes have forced liquidation. They have a lot of other speculative plays that get hit really hard. It causes a lot of selling in the silver market. And so silver, it's a smaller market and just more volatile. So again, huge opportunity in silver, I think, going forward, but I think we still have some time to go before we start that next major leg up. And I could very easily see silver going back up to hit the, that $50 per ounce level in the future. I think both gold and silver are important. I own lots of physical of both, and they're more so of an insurance bet. I don't have massive portions of my portfolio in them, probably about 5-6% of my portfolio, but overall, If they do rocket higher or the world starts to fall apart, currencies collapse, the gold and silver should skyrocket much higher than those levels and help counter, the chaos in the world taking place. Anyways, I'm Chris Vermeulen from thetechnicaltraders.com, and that's your technical analysis for this quarter. Take care. Bye-bye.